Now, we're now at the end of the month of October, a month that's been described by the American author Mark Twain as a peculiarly dangerous month in which to speculate. It's an astute quotation given the recent fluctuations in the global stock market. One after the other, governments in the Western Hemisphere are announcing plans to salvage bank credit and investor confidence. But the real question is, will these plans work?
On March the 16th, the crisis in credit markets claimed Bear Stearns. On September the 14th, Merrill Lynch was sold to Bank of America. The next day, Lehman Brothers announced its bankruptcy. And on September the 22nd, Morgan Stanley and Goldman Sachs converted to traditional banking institutions. America's 5 biggest investment banks were gone in half a year. Some say the transformation of Morgan Stanley and Goldman Sachs marks a historic end to a period of investment banks. But Chinese analyst Tanya Ling disagrees.
Economic globalization has been transformed to investment globalization, which means the role of investment banks is irreplaceable, for they have great advantages in management and in the design of financial products. On the other hand, the financial crisis exposes the limitation of investment banks, especially in self-regulation, from which they will draw lessons.
According to the main world equity index measured by Morgan Stanley Capital International, more than $12.4 trillion of global stock wealth has been wiped out over the past 12 months. To head off a global recession, for the first time, governments across the world are taking concerted steps in injecting capital into troubled banks.
De l'ordre de 360 milliards d'euros.
The government's commitment is considerable. It amounts to 360 billion euros in total.
We have assembled this $10.4 billion economic security strategy for the future. It contains 5 elements.
The federal government will use a portion of the $700 billion financial rescue plan to inject capital into banks by purchasing equity shares.
This is the biggest state incursion into free market capitalism since the Second World War. And the partial nationalization of numerous banks has sparked debate on how best to re-regulate the system. Myron Scholl shared the Nobel Prize for Economics in 1997 for determining the value of derivatives. He says this House believes it would be a mistake to regulate the financial system heavily after the crisis. But Joseph Stiglitz, another Nobel laureate, disagrees. He says the fact of the matter is that most of that creativity was directed to circumventing regulations and regulatory arbitrage. As European fears grew that the U.S. subprime debacle could plunge the global economy into recession, French President Nicolas Sarkozy said that a new form of capitalism was needed at a EU summit. But his U.S. counterpart has a different point of view.
As we make the regulatory and institutional changes necessary to avoid a repeat of this crisis, it is essential that we preserve the foundations of democratic capitalism, a commitment to free markets, free enterprise, and free trade.
Tanya Ling says that from the perspective of neoliberalism, government intervention in the market won't last long.
Neoliberalism supports free markets, free trade, and decentralized decision-making. But when the credit plunges in the market, government will be there to prevent risks being magnified. More importantly, the government's intervention promotes people's confidence and therefore maintains the healthy development of the market.
The market might work well, but economic performance is not encouraging. In the World Economic Outlook, the International Monetary Fund forecasts global recession, predicting a major global slowdown amid financial crisis. And China has been affected as well, especially in the latter part of this year. Figures from the National Bureau of Statistics show that the country's gross domestic product grew just under 10% year-on-year to over 20 trillion yuan, or almost $3 trillion in the first 3 quarters. That's a year-on-year drop of 2.3 percentage points. And gripped by fears of a collapse, other emerging markets, from Brazil to India, from Russia to Argentina, took one of their biggest collective tumbles in a decade. Some politicians think the crisis demands global leaders come up with new ideas and new mechanisms to better manage the future.
We need a core group of finance ministers who will assume responsibility for anticipating issues, sharing information and insights, exploring mutual interests, mobilizing efforts to solve problems, and at least managing differences. But financial and economic cooperation, and for it, we need to consider a new steering group, including Brazil, China, India, Mexico, Russia, Saudi Arabia, South Africa, and the current G7.
Premier Wen Jiabao has expressed his view on China's role. During an inspection in the Guangxi Zhuang Autonomous Region in South China, he said that it would be the biggest contribution to the world for a huge country with 1.3 billion people to maintain steady and fast growth in the long term. Tan Yaling explains China's stance. Henry Kissinger, Secretary of State in the Nixon administration, once said that who controls the food supply controls the people. Who controls the energy can control whole continents. Who controls money can control the world. In 1944, the Bretton Woods system established the US dollar status, which was viewed as good as gold. All currencies were defined in relation to the dollar. Although the system collapsed in 1971, the US dollar became the reserve currency for the nation-states. Following Kissinger's logic, the U.S. controls the money and controls the world. And it's not a joke. As a country that controls a quarter of the world's wealth, it's high time for the superpower to act as a responsible stakeholder for the rest of the world.
Now, as we wrap up this story, listen to these words. It was the best of times. It was the worst of times. It was the age of wisdom. It was the age of foolishness. It was the epoch of belief. It was the epoch of incredulity. It was a season of light. It was a season of darkness. It was the spring of hope. It was the winter of despair. Charles Dickens wrote these words almost 200 years ago in his book, A Tale of Two Cities. He was writing, of course, about Paris and London, but who would have known that they could sum up the status quo of today's American and global financial system?